So who are the regulators? So the AASB are the Australian Accounting Standards Board, and they still exist, even though from 2005, they do not write the standards in Australia. What they do is basically take international standards, as we are now aligned with the International Accounting Standards Board. We take their standards, which they publish, we mull over them for a little bit, we sort of think about it, and then generally we'll just take them as is. We do tweak them from time to time, but we generally just take them as what is published out of London. The International Accounting Standards Board, so this is where I was working over in London last year, they write the standards. And what actually is the case, and I wasn't aware of this, the actual organisation and what it did so much, well, in terms of the operational details, the IASB is actually quite a small organisation. The organisation sitting behind it is 140 people all up. So that's everything that write the standards for 120 countries worldwide. The board who actually makes the decisions is only 16 people. So there are 16 people in the world that are making decisions and issuing these standards. ASIC enforce the accounting standards in Australia, as do the ASX, but they do it through their listing rules. Look, we don't pay a lot of attention to this side of things. We just assume that there is reasonable enforcement in what we do. The framework, okay. I'll start at the bottom, and if you're doing ABC, you're probably seeing something a little bit more detailed than this. But the Corporations Act 2001 requires that companies use, and we are going to only focus on publicly listed companies, but it requires companies to use Australian accounting standards. So if you're a listed company, you also have to abide by the listing rules of the ASX. That doesn't mean other companies and other organisations don't use Australian accounting standards. UTS uses Australian accounting standards. My football club uses Australian accounting standards when they're putting together their annual report. So it is used by smaller non-profit organisations as well. We have to use accounting standards, and these are the actual regulations, and these are the things that we're going to be looking at starting from next week. The conceptual framework sits above it, and we're going to talk about that in a little bit more detail, and this is what the regulators want accounting to be. Now, the best way, I'll use rugby because I just know a little bit about it. Now, if you imagine the accounting standards are the actual rules of the game, so this is when you have people offside, when you have high tackles, all that sort of stuff, that is equivalent to the accounting standards. That is the actual rules of how the game is played. But then when you sit above that, you're going to have what the organising body would like rugby to be. Now that's the International Rugby Board, and they would like rugby to be a certain way, exciting, a spectator sport, so on and so on and so on. And so they'll have kind of overarching ideas about this, and then they'll write rules, which are the accounting standard, the equivalent of accounting standards, as to how the game actually happens on the pitch itself. So the conceptual framework is this idea of just coming together with these concepts that define the nature, purpose, and broad content of general purpose financial reporting. We want to know what the purpose of this whole thing is. And the idea behind that is it makes the whole thing a lot more consistent and hopefully a lot cheaper to put together. Having been at the IASB and seeing the standard setting process in action, look, board members do change. So as you get a new one coming in, they know what the framework is, they know how things get done. There are a ton of different asset standards, different liability standards, and by having a framework, it means you don't have to reinvent the wheel each time. You know what an asset is meant to be like, so when you write a new asset standard on something different, you can look back and say, well, what does a framework suggest that we should what we should do with this? It's not an issue anymore for Australia, or I don't think it's going to be, but with carbon trading, or with the carbon emissions that were going to be, carbon trading that was going to happen, there was an accounting issue around that, because are these assets, are these liabilities? We don't have a standard for it. How do we do this? And they can just, if they needed to write a standard, they can look back at the framework and go, this is what it should be, and we can write it that way. The framework consists of concept 1, the definition, concept 2, the objective, and the framework. Statement 2 really talks about what we've talked about, but just does it in a little bit, does it in more formal language. I do urge you to go and have a look at that over the course of the week. The framework, this has been adopted from the IASB framework in 2005 and looks at how accounting gets put together. This idea that going concern and accrual basis is important, you guys have come across these things, but this is where it gets noted. Qualitative characteristics, understandability, relevance, reliability, comparability. the numbers and the format that we have could be really relevant, really reliable, but if it's written in French, I've got no idea what the hell is going on with it. So we need it to be understandable by the users as well. There are constraints which have to be borne in mind around the timeliness and the cost benefit of the information. We could, with a huge amount of time, figure out down to the absolute nuts and bolts, dollars and cents, exact numbers, but that's going to take too much time and really isn't all that relevant. We need timely information, which is important. Now, the elements here, assets, liabilities, equities, revenues, and the recognition and measurement of those elements, look, we will be discussing those as we get to each of those weeks. So revenue next week, we'll be talking about assets the week after, liabilities in week 6. If you want to go ahead and pre-read that sort of stuff and just scan over it, feel free. But we will be touching on that as we get into those particular weeks. Even with the framework, and the really interesting thing about the framework is they're actually rewriting it right at the moment. Like, it is actually going to change. So the framework that we're going to be talking about, by the time you get out and start using stuff, is probably going to be different. But it'll be in a similar vein. But even with a framework, you're not going to get a consistent and logical outcome. Now, AASB 6 and 141 are going to mean nothing to you at this point in time. But we will talk about those in week 5 and how the fact that even though we have a conceptual framework idea of what an asset is, how 6 uses it, which is around exploration assets, and how 141 uses it, which is around agricultural assets, they actually do things differently. So even though they're both assets that we're dealing with, the way they get accounted for is very different. And there are reasons for that, and we'll explore those reasons. Lastly, I think with this slide anyway, lastly, conservatism is not mentioned once. There's no qualitative characteristic in there saying accounting should be conservative. And maybe they don't need to say that because accountants are inherently conservative. I mean, supposedly we're just a dull and boring people. But it is embedded within the standards all the way through. We will look at specific examples of that starting from next week. But there are conservative options. There are asymmetric treatments for positive things and negative things all the way through what we do. I don't know why that's come back up again. Okay, so section 292 discusses who has to prepare. 296 discusses that it must comply with accounting standards. And 334, the fact that the AASB is the group that issues accounting standards. Okay, so from next week, we'll start looking at the standards themselves. Okay, now just into some sort of additional issues, and this I never really thought of so much before I went there, but having seen it all going on became much more relevant. Actually, in a way, becomes, bless you, the much more overarching thing of the organisation is anywhere where you have money and large sums of money involved in what's going on, you are going to have politics involved in it. And accounting, because it's accounting standard setting, because it is dealing with financial reporting and you're dealing with markets and you're dealing with trading, you are going to have people wanting to make a difference and wanting to have it shown the way that they want to show it. So it is an inherently political process. Now, one example of this is an older example from the US, and I'll refer to a more recent example I saw over in London. So this is a paper written out of the US, published in 2007, and what they were looking at is, were there lobbying efforts in relation to a new standard the US standard setter was trying to get out? And the standard was around expensing stock options at fair value. Now, we don't need to know the details of what that actually means, apart from if a company has to expense stock options at fair value, they've got to go from basically showing a 0 expense for that stock option to a reasonable sized expense for that stock option. Because before that came into effect, you didn't have to show anything around that as a cost. So even though they're issuing these things, they don't have to record it as a negative impact on profit. So ultimately, the companies who have stock options were going to have a lower profit because of this standard. Now, as you can imagine, companies weren't too happy about this. And the core group that wasn't happy about this, because this was turn of the millennium, was the software industry in Silicon Valley. Because they, at the time, basically had not that much money, and they were just giving stock options to people left, right, and center. And even though this standard wasn't actually going to cost them anything more in terms of cash, it was going to make their profits look worse. And they protested vehemently about it. They actually even got out into the streets with placards to protest against this. And if you can imagine the sort of things people actually protest for, protesting against an accounting standard seems a pretty weird one to do, but it happened nonetheless. And what these researchers found was that those Congress members who supported the act to basically stop the standard setter putting these through, they were more likely to be Republican, they were more likely to be conservative, and they received greater amounts of contributions from lobbying groups. And the companies on the other side of the equation, the companies that donated more money to these lobbying groups were the ones with larger stock options who were going to have a larger impact on their profitability. So the companies who were going to be most negatively hurt by this were the ones that put in the most money, and the people who voted to stop it were the ones who received the most money. Now, the authors didn't draw a direct link saying, well, no, this is corrupt, but it doesn't necessarily look great. And ultimately, stock option expensing is in the US. We have it here in Australia, and I think it is theoretically a much better way to do things. There are some operational issues with it, but I think it is still an expense of the business. International harmonisation, this is a massively political issue as well. So, and this is also around where your assignment, this first assignment, is about. So the idea about moving to international harmonisation is to get everyone using the same reporting standards, effectively the same reporting language. Now, having just been to Japan, you go to a country where English isn't the English. Where English isn't the reporting language, English isn't the spoken language, obviously you can have a bit of trouble. My language ability in terms of Japanese is pretty much limited to hello, thank you, where's the toilet? That's about it. Now, the interesting thing, I found this out quite recently, is that aircraft pilots, I was going to say airline pilots, aircraft pilots and control towers all have to speak English. Wherever you're in the world, they have to speak English. And that makes a lot of sense, because I would be pretty concerned if my pilot was coming in on the plane going to some country and they weren't able to communicate with the tower. That would be a little bit of a worry for me. So to have everyone on the same language, there are benefits from it. Have everyone on the same reporting language means that I can invest in a company in the UK and I can pick up their annual reports and I can read them, firstly because it's in English, but I also know how the standards are done. If I go and try to do the same with a US company, there are things which look the same and there are things which are completely different. So I actually have a lot of trouble figuring out US companies. By having everyone using the same thing, it means from an investment point of view, that's easier for me. If you want to list in another country, it is easier to do that. If an Australian company wants to list in the US, they have to prepare reports both in Australian standards and in US standards. And that is quite a costly thing to do. If you're a multinational and if you guys are doing ABC or have done it, the consolidation process, if you have companies in countries which are using their local standards, you've got to convert those out of their local standards into Australian standards to bring them together. So that's a costly process. Why not? Look, there are issues why just international harmonisation itself is a problem. This isn't around a particular company are choosing to adopt. This is about just should we have it in the first place. There are economic differences. Greece is having a huge amount of problems, or it's having a huge amount of problems in the EU. That's, even though they would like to do stuff with their currency that they can't do because they're part of the EU. There are political differences. Again, look at how the US, this is the issue primarily around the US and the ISB, why I don't think they're ever going to converge, even though they've been trying, is that ultimately, and apologies if you're American, I think the Americans like to do things their own way. And so they're not going to want to cede control of their standard setting powers to an international organisation. So I think there are political differences around how things get done. There are also political differences even with the EU compared to London, because the EU is pushing back hard on some of the standards that the ISB is coming out with. So there are issues there. There are even cultural differences. We had a guy doing a PhD here on Islamic banking, and so I'm just based on what I'd heard from him. But in Islam, and Really? Like right in front of me.
Sorry. I'll bring you next week in the same spot.
Right there, I'll mark it down for you. In Islam, there's nothing called interest in there. That concept doesn't exist, as far as I'm aware. Now, that means that when you're looking at the standards around financial instruments, which have the effective interest method, that doesn't work for that culture. So there are issues there are issues around how companies lease things in different places. So there are issues around that. And lastly, there's even issues around implementation and enforcement. Australia, UK, US have good capital markets, mature capital markets with good enforcement regimes. There are definitely countries out there, and I imagine if you've been traveling, not even from an accounting point of view, you go traveling, things are just done differently. And it's, payments are required to do certain things. So just because they use the same standards doesn't necessarily mean what they're reporting is actually what they're reporting. So it's hard to sort of get that idea. Currently, there's about 120 countries that require IFRS reporting. The US, China, and Japan are 3 of the countries that do not require it, or do not require it at the moment. And if you think about their capital markets and the size of economies, you take those 3 out of the world economy, and that's pretty much all of it. US, I don't think will ever adopt. I think we'll slowly converge, but we'll never get quite there. China, they're trying hard at, and bless you. And I know from being there last year, they've definitely shifted their focus away from the US and turned more east and are trying to bring China and Japan on board. Japan, which is the country that you guys are going to be dealing with, they allow local companies to use IFRS in certain cases. And we're going to assume that Fujitsu is allowable to choose to use IFRS instead of Japanese GAAP. So that's a little bit old, that slide, that note. Okay, so what we covered, what accounting is, the functions of accounting, decision-making, contract, and a little bit on stewardship. Regulation, why it's needed, who the regulators are, looked at the framework and looked about some of the issues. The reading, so for next week, look, with this subject, everything, I know it may be slightly different to other subjects, we provide all the material up front. Tutorials, lectures, all this stuff is voluntary. We think there is benefit for turning up, and we absolutely would prefer you do that, but we understand life gets in the way sometimes. That's why a lot of the things are provided online. The reading for chapter 1, look at the conceptual framework and have a look at the textbook. That is a lot of reading, but it is useful to do. If you can just hold on 2 seconds. The tutorial work, have a look at that, and the tutors will work through that with you. The drop-in revision class I'll provide information on, and that will be available next week. And next week we'll look at revenue recognition and construction contracts. Thank you guys. If you've got any questions, I've got about 10 minutes. Otherwise, have a good week and weekend.